At CLS Investments, our mission is to be a trusted partner for financial advisors. One way we empower advisors is by delivering innovative, ETF-based solutions and reliable portfolio management. We continue to passionately believe in our organization's mission of empowering investment advisors. CLS high-quality strategic portfolios are passively managed with a strategic tilt towards high-quality stocks and bonds. Passive management means that we employ a static asset allocation investment approach built according to an investor's desired risk level. In other words, how much of the portfolio is dedicated to the stock market and how much is dedicated to fixed income securities will depend on what the appropriate level of risk is for the individual investor. CLS offers 5 high-quality strategic portfolios ranging from aggressive to conservative. Since these portfolios will not be adjusted based on market outlook, trends, or valuations, they will be less frequently adjusted and have lower portfolio turnover. In turn, this should help reduce trading costs and minimize tax consequences. Portfolios will likely be rebalanced once a year to keep asset allocations in line with the strategic targets. These portfolios are well diversified among domestic and international equity ETFs, as well as domestic fixed income ETFs. The investment allocations are based on broad market securities with a strategic tilt towards high-quality securities. High-quality equities tend to share some common characteristics, including higher profitability, stronger balance sheets, and higher dividend growth. High-quality bonds, meanwhile, are typically treasury bonds which have little to no credit risk, including both nominal treasuries and treasury inflation-linked bonds, otherwise known as TIPS. There is solid academic support for investing in high-quality equities. In short, high-quality equities have outperformed the overall stock market with lower volatility. Because there are different definitions of quality, let's look at a few examples. First, let's look at one definition of quality by looking at the MSCI US Quality Index. This index is a combination of profitability, balance sheet strength, and consistency of earnings. Looking at some recent 3, 5, and 10-year returns, we can see that high-quality stocks tended to outperform. Next, notice the 3, 5, and 10-year betas, a measure of volatility. High-quality stocks tended to be less volatile. High quality also has less risk in down markets. This chart of downside standard deviation, a measure of volatility in down markets, shows that quality stocks have less downside volatility over the last 3, 5, and 10 years. High-quality stocks have had higher returns with less volatility. Using data from Ned Davis Research, we can see that dividend-growing stocks have handily outperformed the S&P 500 since the early 1970s. In sum, we believe that high-quality strategic portfolios can make sense for many investors. It is for investors who believe in a passive approach to investment management. It's for investors who want lower portfolio turnover. It's for investors who want portfolios which may hold up better during down markets. If these attributes are desired, then CLS High Quality Strategic could be an excellent solution. To learn more about high-quality strategic portfolios, please visit clsinvest.com or contact your advisor or member of the CLS sales team. Thank you for your trust in CLS Investments.